The topic I chose was double entry accounting. First, it is important to understand what accounting is, which, according to Tracy Miller Nobles, it is the information system that measures business activities, processing the information into reports, and it communicates those results to decision makers. So I believe that the double entry accounting method is essential for every company because there is a deep and thorough understanding on having better control of a company's cash flow in and out of the business and its various accounts. So the double entry accounting system, it operates with the chart of accounts and ledgers. Both show the activity of the company. Now, this serves as a way to specifically identify what accounts a business uses with an account number and noting which transactions are applied to these accounts. Now, having this transparency allows for decision makers to easily tell what is driving the company's growth and liquidity, and consequently, what is detailing that or derailing that for the company. How this is used, for example, could be as simple as a cash account designated as 1001 in the accounts as a first asset. But there may be 50 cash accounts. Hence, there would be up to 1,051 cash accounts. And then as a second level asset, it could be specifically with expenses. Now, the way this is done is using a T account, which is just based on splitting the transactions between the left side or debit side and the right side, which may be a credit side. Asset accounts are increased by debits and decreased by credits, and the reverse is true for liabilities and equity. So if you're a beginner or an entry-level member, double entry accounting is a simplistic method to understand what goes where in terms of assets and liabilities to an account, and can be done for basic level auditing, or even if in your free time you like trading stocks or whatever it may be, you can look at a company's 10K to analyze the value of that company. For mid-level professionals, double entry accounting can be used to increase efficiency. For example, if one was working in a restaurant, understanding the cash flow from the registers, closing the accounts, making sure the money is correct, even to the inventory that can be ordered, all of that is recorded so that the corporate office can make the best financially sound decision to make sure that operation continues to run smoothly. Now, if you're an executive level professional, double entry accounting serves as a basis to analyze historical track records of liquidity, capital appreciation, and running expenses, which would be valuable for future investors, angel investors, or the prospect of even launching an IPO or even selling the company. All in all, double entry accounting is very important, but can also have some ethical dilemmas if not handled properly. Since a dedicated CPA or maybe a CPA firm may be responsible for the company's accounting, it is crucial to maintain integral work and avoid situations such as money laundering and hiding money from one account to the next, covered up, untraceable. Now, how we address this is by creating some sort of program or software that can efficiently track with accurate precision where money is flowing and going to specific accounts. But we would encrypt the transaction so that it is secured. Now, the main verse that comes to my mind is Malachi 3:10, starring that, "Bring ye all the tithes into the storehouse, that there may be meat in my house, and prove me now, herewith said the Lord of hosts, if I would not open up for you the windows of heaven and pour out a blessing, that there shall not be room enough to receive it." So when we discuss double entry accounting, in a nutshell, it's recording debits and credits accurately, allowing financial statements to be developed that fairly represent a business. So when you use this in your own day-to-day life, even if you may not run a company, even if you're doing it personally, this is still also very similar to just having a basic budget and automating it, understanding what is an asset and what is a liability. And by maintaining the understanding between those, you can analyze your net worth. That in and of itself is the balance, which is what double entry accounting is based on. It's all about having, it doesn't matter necessarily what the assets or the liabilities are, it just matters what account it is in. Making sure that that is tracked and measured for any possible situation that may occur in the future. Now, there are different kinds of accounts that you can have. Now, asset accounts would be listed as debits. Liabilities would be listed as credits. Owner capital owned would be a debit. Capital withdrawal would be a credit. And it goes back and forth to make sure that the right transactions show up in the right place. Now, when it comes to actually expanding this as a company, and it comes to having multiple different brands under an umbrella corporation, if you think about what Warren Buffett has done with Berkshire Hathaway, there are several thousands, probably tens of thousands of accounts. And by having double entry accounting in place, it is possible to see exactly how that all flows into all of the companies under that. So I hope you got a good understanding from this, and I thank you for listening.